Hey everybody, happy Friday. Hope you are having a great week. Hope you had a great trading week. What a busy one it was with tons of economic data, Nvidia earnings that we had on Wednesday. We had GDP yesterday, we had PCE today. Just so much. Now finally the market can just take a breather and relax because it definitely has been crazy. And what we're going to do here today is just take a look at the broader markets, see what's happening out there today. And while we're doing this, if you have questions, please go ahead and throw those in the chat here. And I'll answer any questions that you have or look at any charts. So just go ahead and throw those in the chat. But what we'll do is just start by looking at the broader markets, what's happening out there. And you can see here is the SPX, which we sold off. If I drill down into this, you could see that today, to start today, we did push higher. We did gap up over where we ended up closing yesterday. We sold off yesterday too, pushed up higher and then sold off and actually broke below the lows from yesterday. And now here into the end of the day, we still have some time left. You could see that we're climbing back up. We haven't broke the highs of the day, 56.32, but it's trying. So we'll see if it's able to do that before the end. And you could see that I have two lines here on my screen. This line here marked for next Friday, which is when we'll get the unemployment number. And if you remember, when we got this sell off back here, it was the unemployment number that sent everything down. So I do have that marked. And then I also have September 18th marked because this is when the Federal Reserve will announce the rate cut for September. And so those are going to be two important dates because obviously they're going to drive the market higher or lower. How much, we don't know, but those are marked for that reason. And right now we're just moving sideways above the 10. We have lots of support below us, and it really could go either way. This could be consolidation to push up through into new all-time highs, or it could be consolidation to drop lower. And the one thing to keep in mind is September typically, if you're talking about it from the perspective of seasonality meaning how does the market perform during a particular time? September is pretty weak. So a lot of people are calling for or anticipating that we're going to see a drop, and that could happen, but we'll just have to monitor and see how things play out. If we come over to the Qs, you could see that we dropped actually below the 10. We got saved by the 20. And today we're above the 50. We're back above all the moving averages. Same type of pattern that occurred, popped in the morning and then sold off. And now it's trying to close on a positive side here. So, that's what we're getting on the Qs. If we look at IWM, this is our small caps. You could see that it had this nice push higher. It's been making higher lows since the flash crash. And today, same kind of thing. It pushed higher and then it dropped, and now it's getting bought back up. So we'll see how that closes. And remember, IWM has yet to make an all-time high. Its all-time high, you'd have to go back to 2021. That's up here at 244.36. It should get there before the end of the year. We'll see how long it's going to take for that to happen. But it has reclaimed the 10, and its most recent high, we'd have to go back to July 31st. That's 228.74. That would be the next target, the next area to watch. That potentially could be a resistance that could knock this back down the chop along sideways. But what you're seeing, and I talked about this in addition of the Traders Podcast, is a lot of people are moving and rotating out of big tech, the bigger companies, your Microsofts, Apples, into small caps, because as rates come down, the debt that a lot of these small companies carry becomes less expensive because the rates are lower. So keep an eye on that. We might continue to see the rotation, but we're seeing some strength. This thing get bought back up here today. Then if we look at the volatility index, we could see that that's coming down. We had that huge spike on the flash crash, and really we've just been moving sideways. It's down, so that's bullish for stocks. Again, if you guys have questions, go ahead and throw those in the chat. And I'm just going to take a look at a couple tickers here. I'm not going to look at a ton, but I did want to look at Nvidia. You could see what happened on earnings. I thought that it would have gapped up on earnings and sold off, but it just gapped down. And it had a great earnings report. Um, I think they beat expectations, but they beat them by like 5% instead of 10%. So because it wasn't perfect, they were punished a bit, and that's why you had some selling. But you can see it's stuck right there on the 50. It bounced, and today did the same thing. It dropped down to that 50, got saved, and it's just really moving sideways. Now, does it mean that we're going to come down? If we do, that 100 would be a bouncing spot. And if not, got to watch this upper trend line resistance here that it's failed to get above. Um, and if it does get above that, then we'll have to watch that all-time high as the next resistance point. So, um, you know, still a great stock. My approach to this is right now is I'm not trading it. I'm just buying it long term. I'm a long-term investor. But a great stock. And this little dip is really a buyable opportunity. If we take a look at Tesla after it hit that high here around 271, it dropped, saved by the 100 SMA on the daily, bounced, didn't get saved by that mother of all trend lines, came back down, and now it's bouncing off the 100 SMA on the weekly. And today, if it finishes like this, it'll close above that 10 EMA. So that's decently strong for it. Doesn't have much more above it. And remember, the robo-taxi event is going to be October 10th. That will be a big day for Tesla. I'll definitely be keeping an eye on it in terms of what plays out as a result of that event. And then let's just take a look at two more. I did want to take a look at SMCI because it had this big, massive move down here on Wednesday, and it was because a research firm, Heisenberg, I believe they're called, accused Supermicro Computer of cooking their books, creating misleading financial statements, and that they had opened a short position on this company, and you saw this big, massive move down. It doesn't look like much on the daily, but if I go to the 3-minute chart, you could see just how devastating this move was. And from pre-market, if we just measure from this candle here to the low where it got down to 394, it was a 140-point move. And so if you were able to get in on this short with shares, or if you bought puts, you had a really nice day. But since then, it's been recovering a bit. It is down a little bit today, $12, but this should be rebound and recover. Their CEO is pretty reputable, so the accusations that this company is being lacking integrity, being dishonest, that's probably a stretch. But regardless, it got crushed, right? So, but it is getting bought up a little bit. This 100 SMA on the weekly would be the major support that should save it if it were to drop lower, and if it would break through that, then oh man, 200 SMA on the weekly. So it could get a little hairy there. And then lastly, let's take a look at Bitcoin. This thing just cannot sustain any bullish momentum. And you could see it's just been making lower highs since it made its all-time high in March. Lower high, if I mark these out, lower high, or there's the all-time high, then lower high, lower high, lower high, lower high, lower high. And so pressure could be building on this one. It has to get moving. Every time it does get above the moving averages, the bear step in and knock it down. And so keep an eye on this one. It is back now below all of its moving averages. We'll see if this can generate some movement. But it's kind of stuck. It's range bound. And really the markets overall have just been kind of range bound, moving sideways. They do need to pick a direction. Are they going to go up? Are you going to go down? And as you saw on that daily chart, they're set up for either way. So next week should be a lot of fun trading. Remember, it's the start of a new trading week. There is no trading Monday because of Labor Day. And remember that the September is typically weak for the markets. It's actually the worst month of the year. And the last 2 weeks of the month are actually the worst. So Doesn't mean that there's going to be a repeat of that this year, but just keep that in mind as you're preparing to trade for a new month. Quick note on the podcast. The Traders podcast will probably be out Sunday, a little bit later this week. So that'll be episode 31. Stay tuned for that. And I don't see any questions in the chat, but I appreciate you guys joining me here today. And one quick little thing that we'll do here, let's just check economic news for next week. And let's see what we have. So again, we're going to have ISM manufacturing PMI on Tuesday. That's at 10 a.m. That will be something that we'll look at for the strength of the economy. Is the economy contracting or is it growing? We get JOLTS on Wednesday. That's going to be job openings and job quits, which is something market makers are going to want to see in relation to the potential of a recession. Jobless claims on Thursday, which is going to be really, really big. And we're going to get, what else are we getting here? We're getting S&P Global Composite PMI, ISM Services PMI, which will definitely move the market. And then the big data on Friday of next week. There's big data every week in the markets. It's non-farm payrolls and the most important, unemployment rate. This will move the markets. If this is bad and ticks up higher, you're going to see a pretty significant sell-off. So next week, stay tuned. Thank you guys so much for your support. Please give a like to this video, drop a comment, any questions that you have for me to answer, subscribe, and I will see you back here next week for another edition of Ask a Trader. Take care, everyone.